We welcome Bill Thompson, now Senior Managing Director at Municipal Investment Bank Siebert Branford Shank. Bill is planning to run, by the way, in the interest of full disclosure, for mayor of New York City in 2013. And of course, the current mayor of New York City is majority owner of Bloomberg LP, my employer. Welcome to the show, Bill. Good to have you here today.
Lisa. Thank you.
I mean, you worked as 8 years as a comptroller. You have a lot of firsthand experience here. First of all, I think a lot of people don't fully understand what collective bargaining is versus right to work.
I think when you look at collective bargaining, it is the right for unions to sit down and negotiate with, in this case, states or cities, the municipality, everything from pension benefits to salary, health benefits, and on and on. And I think that's what we're seeing right now, as opposed to a place where unions, in fact, a right to work place where unions don't have that ability to be able to sit down and negotiate on behalf of others.
They can't force an employer to negotiate contracts.
And I think that's, what you're looking at in Wisconsin and a couple of other places is the right is to be able to say to those unions, no, you can't sit down, no, you can't negotiate, no, you can't represent the workers of that state.
Well, there is clearly, we mentioned there's a lot of debate around this, but I just want to pull up something from Governor Walker, Scott Walker, Republican of Wisconsin. Now, this is what he talks about when he talks about sort of the measure to get rid of these collective bargaining rights. He said it's intended to address a budget deficit projected at $137 million in the current fiscal year and $3.6 billion in the next biennium, so the forward 2 fiscal years. Is that the case? How does this do that?
Well, I listened to the governor yesterday as he spoke to the press, and he indicated that he's going to be getting, that if people didn't have to pay union dues, because it also would restrict that. They wouldn't have to pay union dues. They would have more money to put in their pockets. And really, that doesn't help to close the budget deficit. That's not what this is about. I think what you've seen in Wisconsin, the unions out there have already made public concessions. They've already talked about paying more into their pensions. They've already talked about paying a greater percentage of health benefits. So at a certain point, you have to sit back and go, wait a minute. If it's not about that, if it's not about closing budget, and he's also talked about budget cuts, and I think the unions are working with him or trying to work with him on that. If it's not about that, then what is it about? And really, it isn't about, or it doesn't appear to be about, closing the budget gap.
Taking away collective bargaining rights may be addressing a short-term issue, a budget deficit, but looking at the unfunded pension liabilities, that is a long-term issue that people have been talking about for years. What's the solution to that?
In the end, I don't think there is an easy, one-step solution. I think you're going to have to, on a pension fund by pension fund basis, you're going to be looking at things all across the country, people paying in greater amounts for longer periods of time for members of pension funds to vest. I think you're going to be looking at, people working longer, because I think we're getting into that also. So it isn't going to be a one-size-fits-all. I think you're looking at different pension funds that are in different stages of, if you look at some states, they have huge out-year budget or gaps when it comes to pension. Others are, like a New York City, much better funded. So I think in the long run, you're going to have the conversations almost in an individual state-by-state, municipality-by-municipality basis.
Well, one of the reasons we're talking about this on a short-term basis anyway is because we mentioned that you and I were discussing this during the break, federal stimulus funding.
Yes.
Now, a lot of people don't want interference on the federal level. However, when they need help, they like to have it on the federal level. But where does the president stand on this? He seems to have sort of retraced his steps a little bit, came out strong in the way that was very sort of pro-union, is how some might call it, and then seems to have pulled back a little bit.
Well, I think, if you look at some of the commentary, and some of the union leaders have been saying that, some of them would like him out there a little stronger, but some of them are saying in the states where you're having these strong debates, Democrats just lost. And they lost a lot of this in some of the states was an early referendum on the president. And I think some of the union leaders are saying to the president, wait a minute, we appreciate the comment, but we're going to fight this battle on our own. And I think that's what you're seeing in some of the states right now. A little bit of a mix. Union leaders on all sides. Some saying we'd like to see a little bit more of you. Some saying don't help us a lot more.
All right, I want to ask you about Muni Bonds, because now you have an interesting role, having gone from comptroller to sort of Muni Bonds, sort of investor advisor. What are you telling it, knowing what you know as a comptroller? What are you telling investors right now? Munis were a fantastic, from a performance perspective, asset class for the last few years. We really have seen a turnaround over the last few months, however.
I think what you're still saying to investors is this is a good investments on the municipal bond side. Do your homework. Make sure that you're an educated investor also. I think most of the impact on the municipal bond side has been created by headlines, by people talking about defaults. And I think a lot of those people really don't know what they're talking about. So in the long run, the municipal bond world is still a safe world. It's a strong world. We're not going to see a huge percentage of defaults. That's not going to happen.
But when you see headlines coming out of Wisconsin, and rarely has the market, I think, been this connected to what happens on a credit perspective at the state level, but are you starting to see municipal spreads widening related to specific budget conversations?
I think that each individual issuance, each state, each municipality, people have to do the homework and take a look at this and invest based on that. At the same point, I think the default conversation that people were bringing up before was really tied more to unraveling in pension funds and long-term pension and health obligations. The discussions of bankruptcy and default were all tied to that. It wasn't about municipal bonds. It wasn't about credit worthiness. It was tied into other things. And I think, the conversations these days, people have to take a step back and understand that most of the conversations, what's this really about? So conversations are about, is it about changing or undermining unions? Is it about getting out of pension obligations and getting rid of health obligations? That's what we're seeing. It isn't about, how steady, how investment worthy a municipal bond is. That's not the real conversation.
All right, Bill, we're going to end on that note. Thank you so much for joining us today. Great insight there.